Hi everyone, this is Gersher from Technical Options Traders Inc. I'm here to bring you guys another segment about trading and how I use the value weighted average and the 9-day EMA on a daily basis to trade options. Okay, so now I'm going to start off with a charting here, and what you're seeing in the background is just my chart on Tesla on the daily. As you can see here, this is my trading list. These are the ticker symbols that I trade on a day-to-day basis. I try to trade small amount of tickers as possible so I can focus my attention on them. And here what you can see on TrendSpider, they have a great tool where you can see insider selling or buying and seasonality for a stock over the past 5 years. I mean, you can go much further back, but I try to typically focus on the past 5 years and see how that particular month or season has done, okay, or a quarter has done. So without further ado, let's begin here. So I typically trade options on a day-to-day basis. I don't really hold a lot of positions overnight. I know a lot of people can make big amount of money like that, but I found success in day trading options. And how I day trade is I wake up every morning and I look at the market and see how it's doing. So what I do is I look at SPY. Right, okay, SPY, this was Friday, pre-market action, not too great, not a lot of strength, right? And it was very choppy throughout the day, as everyone knows. And then I will look at the Qs, right? Same thing, very choppy, still a downward trajectory in the past 2 days. And then I start comparing my ticker symbols, okay? What I focus on is pre-markets, and I focus on the pre-market high and the pre-market low. Okay, so when either direction the stock breaks, I enter my position. So stock breaks here, I enter on the next candle, not on the same candle, but the next candle here. Okay, so now because I'm buying calls here, because I'm trading upwards, I'll probably buy, if this is trading at 680 right now, I'd probably buy 690, $5 away. Just because out of the money options are a little bit cheaper than in the money options. So I'll let the stock ride, and I typically risk about 2% of my portfolio. And this right here line, it was a breakout point, the pre-market high. This is also my stop point. If the stock was to reverse back down, I would get out here. I wouldn't even question it for a second. I'm out, because what I want to do is I want to minimize my losses, but also I don't want to get faked out either. There's a lot of fake out moves, as you can see here, up here. Right, stock is unable to go higher, but it's not really going lower. Someone can, like, typically this right here, it's gonna it looks like it could like flag right before going higher. So that's exactly what it does, right? So I want to avoid getting out too early. So if I'm entered here, I usually have like two contracts, so two options contracts. At this point, I would probably take profits on one and let the other one ride just to see how far it goes. If this level fails, to be very honest with you, I'll probably end up getting out, right? Because I don't want to give away my profits that I've already made. Okay, and then I'll probably wait until the next day just to kind of see how Tesla is in the morning. Now, also I use a 9-day EMA as support and the VWAP as well. If, as you can see here, it touches the 9-day EMA, but it doesn't break, like it closes below it, but as the next candle, there's no candle reversing to the downside, right? It's still holding it. That's a positive sign. And then if it was to break it, if I'm like all the way up here, I have a good amount of profit, I'd want to see the VWAP broken as well. It's not, it's holding. That's another way you can kind of trade this. Now, if I was to go back on Tesla a few days further out, let's just say I'm trading this day here. This is a choppy day. This is a good example. This is why I like to take profits in my positions and not leave my positions to chance. I don't want to get too greedy here, okay? As you guys can see here, it breaks the pre-market high all the way up here, right? And this is a pre-market low. So one candle break, I always wait for the second candle. Second candle, not able to go past this. Now, what am I going to do here? Absolutely nothing, right? It reverses back down. Am I going to chase this down move? No. because does it break the pre-market low? No, there's no reason for me to enter. So this day, I completely avoid a chop move. Once again, this is the strategy that I use. Doesn't mean it's gonna work for everyone. Some people be like, okay, you know what? It failed. I'll buy puts here. I'll make money. You probably will, but I find it that chasing a move is a lot harder because it can reverse rather than having a plan and sticking to it. So I'll go another day, one more example on Tesla. So this is April 27th here. Pre-market low, pre-market high, right? These are my levels here. Pre-market low broken, right here. This is a big candle, right? However, the next candle is a green candle, right? Now at this point, I'm probably thinking, okay, this could reverse. I wait for the next candle, not able to go lower. Next candle goes higher. Now I'm gonna use it. This is the 9-day EMA. It touches the 9-day EMA here, and it bounces back down. So I'm going to be confident, and I'm going to buy a put option here. Okay. Now my stop, mind you, is still up here. But as I see, once I bought a put option here at this close, yeah, at this point I'll probably be making money. But as soon as I see that, okay, I'll probably wait for this test, multiple tests here. But once it breaks higher, I'll probably get up right about here. Because you know what, I'm not too confident on this day. Very choppy move, and then I'll watch for a bit as well. Then once again, it goes up here, breaks this level here again, the pre-market low. And here I will one candle, two candle. This is also buyers trying to go higher, but sellers pushing them right back down, and it pushes, it closes below, I believe the 9-day EMA, and then it keeps going lower. Okay. And as it keeps going lower, you know, you're pretty much at this point you're making a lot of profit here. See, like I entered here, probably got stopped out here, you know, stopped out here. I entered here, probably would have made a decent amount of profits. The thing about it is you got to keep your position size small. I'm always about 2% of my portfolio that's in it, and I exit very quickly if the trade is not going in my way, because options, especially trading weekly options, the trades themselves, even if they're not going in your way, the options can decay very quickly, so you'll start to lose money. So I believe in not giving away profits, and I'm not giving away my capital as well, and taking smaller losses, right? You can always find re-entries into a stock. Okay, so this is an example on Tesla. So I'll do Amazon as well. Amazon Friday, I didn't trade it, to be very honest with you guys. Reason why, after earnings, there's a lot of premium crunch in the options, and so it's never, for me, I found it's always a losing strategy trying to trade a stock the day after earnings, especially. You will lose a lot of money. Now, however, throughout the week, there were good opportunities. Like for example, on Thursday, pre-market high, right? You got the pre-market low, pre-market high, pre-market low is broken here, right? What next candle is here, not able to go higher than the not able to go up here and close higher. So it's choppy move, closes below the pre-market low, next candle here. I'm entering at this candle, probably you know, small 2 contract position out of the money, and I'm letting it ride, right? And I'm probably taking money somewhere here. I'm taking my profits here, and I'm not going to risk any more money other than here. Okay, so if you guys found this video informative, please like and subscribe to our page, and I hope you guys have a great day.